The first is a tip that we've covered on the podcast before, and that is to discuss your available options for debt payments with your lenders. This is a tip that I share over and over again when people are worried about their options, when finances are in a rough shape and they owe money for certain debts. I tell them, do not take this opportunity to run away from your lenders. The more communicative you are with them about your current situation, the more options you'll discover that you can to delay, pause, or put yourself in a better situation with those debts. And options are going to vary based on the debt that you're negotiating, but I want to make you aware of some things that we see in given situations. We're going to start with a mortgage. If you're looking on screen, you're looking at an article from Consumer Financial Protection Bureau talking about mortgage forbearance, and it shares some of the options. The first of them being a formal forbearance period, and I've seen that stretch anywhere from 3 months to a year. And depending on the lender, the options that they give you on the end of that forbearance will vary. I've seen options where you may be able to avoid payments for 3 months, but at the end of the 3 months, you have to make a lump sum payment of those missed payments, which really doesn't make sense. If you could have made a lump sum payment, you would have just paid them during that period. However, I've also seen forbearance where they'll say, hey, we're going to give you 3 months of forbearance or 6 months of forbearance, and we're going to take those 6 months or 3 months that you missed, and we're going to add those to your mortgage payment until it's repaid. So, for example, they would say if you missed $20,000 worth of payments over a certain period of time, we're going to take that $20,000 and break it up over this period and over the course of the next year or 18 months, add what's needed to your original mortgage payment so that at the end of the term, what you missed during forbearance is repaid. Another option that I saw frequently during the pandemic was an option where they will simply take the amount that you missed during forbearance and tack it on to the end of the loan. So at the end of the 30-year mortgage payment, they're just putting at the end of the amortization period, which in my experience has had the lowest impact on what your mortgage payment ends up being when you come out of forbearance. But these are some of the ways that mortgage forbearance can typically work.